know. I don't know the answer.
Right, so that's about PB Fintech, but let's take a look at Jubilant FoodWorks, among the topmost losers in the F&O space in today's trading session. And this, despite an inline second quarter numbers, Nigel, if you just take a look at their revenues as well as the EBITDA, was no different from what the street was anticipating. Yes, the gross margins declined by about 200 basis points, but that was understandable because of the cheese and vegetable inflation, etc. The net profit on a reported basis was lower than street estimates, and that's because of a non-cash expenditure. Depreciation came in at around 112 odd crores versus 90 crores. And the effective tax rate was 26% versus 25%. The Domino's like-for-like growth, which is basically the new metric that the company is given as, again, same-store sales growth, had come in at 8.4%. They've added 76 new stores versus 50 to 60 that the street was expecting. And in the conference call, they said that they plan to add around 250 new Domino's stores in FY23 itself. The first half, they've done around 135 odd. For the non-Domino's business, Popeyes is the growth vertical, where they believe that this year they will open about 20 to 30 stores. But all the other businesses, which is Hong's and Ekdam Biryani, they are looking to, scale back right now to assess unit economics and only talk about all of this in the next financial year. And that is something that the street does not like. I'm looking at a couple of brokerage notes. ICICI Securities, for instance, has said that stagnant revenue per store, if you look at, the number of stores that have been expanded and over the last 3 years, the revenue, the way that has taken place, that is one of the concerns. And secondly, execution in new brands has actually utilized management bandwidth with subpar outcomes so far. Jeffries as well, they believe that the 3-year revenue CAGR for the company has been moderate 9%, and the entire benefit of price hikes that the company has taken has not translated into revenues because people have started to downtrade. So they've also trimmed their EPS estimates by about 3 to 4%. They've retained a hold rating with a target price of 580, and ICICI Securities has scaled their target price down from 750 around to 720 odd rupees. So the brokers are believing that, well, these numbers are okay in line, but the long-term trends do not indicate that, a lot of people are eating a lot more pizza. And why just pizza? The non-pizza business as well is taking a lot more management bandwidth than the results that it is giving.
Okay, all right. Mangalam, thanks for that. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.